Yeah. Okay, MMTs. This is a TYP. It's a technology ETF. The P is, what is it, MMTs? TYP, what's the name of it? Okay, so the bear is moving higher. It gaps down on the open. When everything gapped up, the other side of this is the bull, and it's a technology one. They gapped that straight up and sold it off, and it had its volatility, and it's come back to Friday's close almost to the penny. You can see that the bear right here, the bear, just the opposite. Here, let's look at it. It's right here. They're both in the video. Let's make sure that it's all the way in there. I'm not sure. There we are. There's that bracket on that one there. Here's this one here. Let's see how far down we can go. But you can clearly see here that this broke higher off of the lows here, and this was a long position on the gap opening down, and the bull was sold short on the open, and this broke out. The bear broke out right here. You can see the bear. It had broke out higher. It had broke out higher, and this bull just keeps breaking lower. Now if I reverse here and get support here, I'm going to look and see what happens. So we didn't come all the way back up to Friday's close in the technology 3x bear, and we haven't quite hit the lows over here either, the closing lows of Friday yet either. We came right in here. We're dangerously close to it though. So the bear and bull count in technology is as follows right here. Here's the great breakout. Left elbow gap down on the technology 3x bear with the great breakout and a reversal. On the other hand, the bull, the H, you can see how that thing gapped in pre-market. You can see how it's made lower lows all day and how equities went right along with it. There's one other one in here for you to know. MMTs. You already know this. We're just reiterating. But look at the, here, let me move this over here a little bit right to there. Now let's move this one over. This is called a TQQQ, and it's a bull ETF. Now, take a look at both the bull, technology bull, TYH, and the technology, this is not technology, but the bull TQQ ETF. Look at how it sold off and how it made lower lows and came all the way back to Friday's lows almost right here. Now, what we're looking for is that when they both turn, you can get net long here, go long here, go long here, because the shorts already worked. So we came back, we filled it in, we're starting to move up, and we're starting to move up. This is where we look at the 8:50 a.m. Pacific Standard Time, 8/22 of 2011, how the bulls can be shorted in ETFs and how the bears can go long the opposite of these moves and what they're all about. So basically, if you're short in this one, you should be short this one. And if you're short those two trades on the open when they happen within the gap sequence, opening bell, then you should also be long the bear technology. And it doesn't have as much yield, but you can do that. You can also trade the SQQ. Okay? And we're elevated. And on the other hand, when we take a look at these components, there's another major component called a fear indicator called the VXN. It's a fear indicator that is part of the NASDAQ 100 and the NASDAQ comp. They gap the fear indicator down. You put in a double bottom, but you've been breaking higher. And as that fear indicator, the VXN, is called volatility index, you can see that when those break higher, when the fear breaks higher, stocks break down. Stocks break down. You can see over here that the TQQ, when the fear is breaking higher, this is also going to break down. When the VXN, this one is breaking higher, then that means that there are certain kinds of bears that break higher. You're only 31 points up on the Dow right now. That's it. 31 points. And if I go over here to Data Manager and I create another chart, so they're still selling the move. So the fear factor still remains because that's what's happening. You can see that we have gone into negative territory. You can clearly see that everything is selling off, and we're starting to put in some bottoms here. So we'll take a look at what happens between the bear, the bull, the SQQ, the TQQ, the TYP, the TYH. Not only that, Apple's given all its gains up. The high was 364. They shorted it down, but they ran it from the original lows in the pre-market gap up to sell short all of these names. Okay? And same thing with Google. See, it too, 507 back to 495. Low Friday, closing bell Friday was 490, still $5. But look at how much of that gap it's given up on the short, and that's what we were talking about in pre-market. Not only were we talking about that one, we were talking about several of them. Amazon being another one. Amazon makes the highs of 184.20 in that top-down trade. Everything that we talked about, MMTs, and here's the chart. Amazon. I'll pull it up. Right here. Amazon. Right elbow. Double top reversal. Look at that. Look at that gap. They sold it. They ran it. And that was a kiss goodbye. And it's right back to Friday's closing lows. That top down trade, everything that we talked about happening in pre-market is happening live here now. And MMTs, it was my gift to show you about that volatility. People are still selling in fear. People are still selling in fear. That was part of the trade management. Let us not forget Priceline. PCLN. PCLN. Priceline. Down 6.2. High. 4.6399. We featured Priceline over the weekend. We featured Priceline on Sunday. We featured that Priceline.com was putting in a multi-yearly 2011 closing on the lows on Friday and was subject to breakdown, and that short is working here and now live on Priceline.com on a multi-2,000-year low, and we have broken that Friday's low, and that's what we were talking about on that trade. Okay? I'm going to conclude it for now, and we're almost 2.5 hours into the tape.